Hello and welcome. Thank you to everyone who has suggested that I should do a video on this topic. I think it might be enlightening and interesting. We're going to take a deep dive into income tax and how it works for Australians. It doesn't matter if your employment is full-time, part-time, casual, contractor, self-employed, or you work in the gig economy, income tax works the same for absolutely everyone. And yes, unfortunately, we are going to have to do a lot of maths. Let's start by looking at the tax tables. This one is for the 2024-25 financial year, and the Australian Tax Office publishes one of these for every year. These bands show the tax rate for that portion of your income, and they are the same for everyone. So no matter what your income is, the first $18,200 you earn in that year is tax-free. For that portion of income between $18,201 and $45,000, the tax rate is 16%, increasing to 45% for the portion of the income that exceeds $190,000. Additionally, everyone, regardless of their income, also pays a 2% Medicare levy that funds our universal healthcare system, including the PBS. Let's take a look at an example. Say our income for the year is $140,375. That places us in the fourth band, meaning our marginal tax rate is 37%. The ATO provided tax table saves us some of this maths. Instead of having to calculate each income band, we can just take the pre-calculated amount provided and add the tax for that band. Because we are in the fourth band, the tax is $31,288, being the accumulated tax for the lower three bands, plus a margin of 37% for all dollars over $135K. That gets us to $31,288 plus $19,088 for that portion of band 4, which totals out to $33,276. Add on our Medicare levy of $2,801, that gives our total tax plus Medicare equal to $36,083. These tax bands can be a little bit confusing, leading to the impression that if you get a pay rise, it means you pay more tax overall and you would have been better off if you hadn't got the pay rise in the first place. This is false, so let's go through some examples on how we can prove that. So, let's say we're on an income of $134,000 per annum, which puts us into the top of tax band 3. Then we get a pay rise to $140,000 a year, putting us into the bottom of tax bracket 4. What does that mean to our take-home pay? To save us a whole heap of maths, the ATO has kindly provided us with a simple tax calculator which is available for free on their website. We plug in our income of $134,000 and the website returns that our tax for that year is $30,988. We then plug in $140,000 and the answer is $33,138. Now that we've got those numbers, we can fire up our favourite spreadsheet and see what's coming out of it. So our income went from $134,000 to $140,000, so that's a pay rise of $6,000. Our tax went from $3,900 to $33,138, so the tax went up by $22,038, and our net went from $103,100 to $106,862, and net went up by $3,762. So clearly, got a pay rise of $6,000. My net's also gone up by $37.62. I'm taking home more than I would have if I didn't get the pay rise. Myth busted. The ATO provides a whole heap of these fantastic tools, so go and check out the website. Everything you need to know or calculate, they've got something that's going to help you do it. Yeah, okay, there are a couple of edge cases, but they don't affect everyone, so just check to see whether this applies to you or not. First off, if you're on any sort of income-tested government benefit, like the family tax benefit, there are reducing benefits depending on your pay scale, and there is a hard cut-off limit, so in certain circumstances, you might lose a benefit due to your pay going up. The other one is Division 293, which is a limit on superannuation. So once you reach $250,000 of income, including your normal PAYG plus super, if that hits $250,000, the tax rate on your superannuation changes, so look into that if you're approaching the $250,000 limit. Capital gains tax, despite its name, is actually just an income tax treatment. It deals with the profits made from buying and selling assets like shares, real estate, cryptocurrency, and collectibles. To calculate the capital gain, we need the purchase price and date, the sales price and date, and the direct expenses like buying and selling fees and the holding costs. Given that some of the price increase of an asset might be due to inflation, a discount of 50% is applied to the taxable amount if the asset's owned for more than 12 months before being sold. As an example, let's say we earn $100,000 from our general normal PAYG employment. We then sell our gold bar, resulting in a gain of $150,000 from that sale. As we've owned it for more than a year, we get a 50% discount, meaning the taxable gain is $75,000. For that year, the $75,000 is added to our $100,000 income, resulting in a total taxable income of $175,000 for that year. We then pay income tax subject to the usual income tax scale. Pay-as-you-go and tax returns is a whole bunch of accounting, which we'll go through at a really high level, and this time, fortunately, there's not going to be any maths. Every time you're paid as an employee, your employer makes an estimation of the tax that should be payable based on the tax scales. They do a return to the ATO, and they make a payment of the amount of tax that they've withheld on your behalf. The ATO, believe it or not, has an account in your name, and that account is numbered by your tax file number. When they receive a payment from your employer, they pay that into your PAYG account. Your annual tax return is simply an accounting process that reconciles the PAYG that was withheld on your behalf with your actual tax amount that you're due to pay. To do this, the tax return asks you for all of your income, your PAYG, your interest, your shares, all your other types of income. They ask you for all of your deductions. These are things that the PAYG instalment did not allow for. So it's your work expenses and your costs for maintaining your tax records and all those sort of things. And the difference between your income and your tax deductions gives you your taxable income, from which your tax due is calculated from the tax tables. The final stage is the ATO simply compares the amount that you have in your PAYG tax account held with them and the tax due from your tax return. If the tax account balance is greater than the tax due, you get a refund, and if it's the other way around, you get a tax bill. Simple as that. For most of us, work expenses are the largest source of tax deductions. The ATO, again, on their website has a big list, really descriptive around what you can and can't claim as a work expense. But in general, the things that you can claim are tools specific to your occupation, safety equipment, things like desks and laptops if you're an office worker, income protection insurance, charitable gifts and donations, working from home expenses, and up to $300 worth of other expenses without any receipts at all. In my humble opinion, the hardest part of doing a tax return every year is working out how to log into the ATO site to get to the actual return itself. For this, we're going to need a MyGov account, a MyID digital ID account, and the MyID app for your phone. To start with, go to MyGov and then choose Sign In with Digital ID. That then gets you to the Digital ID system page where it asks you to select your ID, which funnily enough is MyID. We then need to do two things simultaneously. The first one is the MyID page, which will pop up on your web browser, and you need to enter the email account that you've registered for MyID. Then click the Get Code button. As that's happening, open up the MyID app on your phone and put in the MyID password and hit the login button. The app then presents this login request page, and you need to enter the 4-digit code from the website into the app. The MyID website then bounces you through a couple of pages, and then you end up on the MyGov website signed in. From here, you can click on the Go to Australian Taxation Office button. It bounces you through a couple more pages automatically, and eventually it will ping you up on this Australian Government Australian Taxation Office page. Congratulations, you've made it. The UX on this easy 10-step process is horrible, and by the way, it only ever works if you've already linked your government services into the MyGov account, which doesn't happen automatically. That's a whole nother thing. At this point in the proceedings, I was about to launch into the best 10 minutes of YouTube video ever, which was about how to complete a tax return itself. But lucky for everyone, including me, there's a great government guide on how to do it, so I'll save everyone the pain. Just go to the website, it walks you through the entire thing. It's really easy. If you've made it right to the end, fantastic, thank you very much. If you could also do all the little YouTubey things, the like, subscribe, comment, that would be great. That helps the YouTube algorithm promote this to a wider audience. And like this 15 million Aussie taxpayers, let's see if we can get like half of them to watch this. It would be fantastic. Thank you for watching.